Good morning, everyone. On behalf of ourselves at Mazars and the Shannon Chamber, I'm delighted to welcome you to our webinar this morning. Just to introduce myself quickly, my name is Hilary Larkin and I'm a partner at Mazars, leading the firm's outsourcing and payroll offering. The briefing this morning is going to be given over two sections and will be given from the perspective of employer compliance with action points that arise from these new pieces of legislation. The first section is on enhanced reporting requirements, and we hope that this update will give you a comprehensive understanding of what is going to be required from a revenue perspective. This update is timely as the commencement date of January 2024 is quickly approaching, and employers are going to need to get their houses in order in order to comply with this legislation. So there's several practical issues that people need to be thinking of in terms of employee expenses and benefits that's going to need to be thought through before this deadline. And hopefully this morning will give you some insights in that regard. We're delighted to have Martin Hunt from Revenue on our panel this morning, and he's going to deliver his update straight from the horse's mouth. Martin works in Revenue's PAYE Information Modernisation and Support branch, and his role includes change management, data analytics, IT maintenance, and enhancements for the PAYE online services. He's well positioned to answer any questions that you may have in relation to the practical application of this new reporting requirement, and he's going to give you a general overview of what it actually is, steps that need to be taken to prepare for it, how to streamline compliance, and software developments that have been made to integrate into Revenue's new reporting facility on Ross. In our busy working lives, it's really hard to stay up to date with legislation as it evolves, and we hope that this update this morning is useful. And on that note, I'll hand you over to Martin.
Thank you very much, Hilary. And thanks for that introduction. So yeah, what I'm going to do now is I'm going to share my slides, and I'll talk to the slides for the next kind of 15-20 minutes. Effectively, what we're going to do is I'm going to outline, as Hilary said, the report requirements and the practicalities and some information about what you need to consider, I suppose, in relation to that. And then towards the end, I'm also going to show demonstration screens as to what the facilities in the Revenue Online services will look like insofar as making the report to Revenue, be it by file upload or completing the Ross online forms. So yeah, I'll get started, and as I said, it's going to take about 15-20 minutes, and then I'll be passing over to one of the other team on the session here, and we'll take Q&A at the very end, I think. So everybody can see my screen, hopefully. Enhanced report requirements. So effectively, where this came from, it was introduced in the Finance Act in 2022 under Section 897C. And effectively, it's requiring employers to report to Revenue details of particular expenses and benefits that are provided to employees and our directors. And if I do say employees at any point throughout this presentation, I'm also referring to directors in the same context. So you can take it to mean both at any time that I mention an employee. What does that mean, I suppose? So you'll be required to report details of the amounts paid under a couple of categories. So the three categories that are in phase one of this report requirement are the travel and subsistence payments that are made to employees tax-free, the payments made under the small benefits exemption, example of vouchers or gifts, and then if there's a remote working daily allowance being paid by employers to employees, then that's also reportable under the first phase. It is subject to a commencement order, and that will be signed before the end of the year by the Minister for Finance. And as Hilary said, it's going to come into effect on the 1st of January 2024. So what that practically means for an employer is that any payments made on or after the 1st of January 2024, regardless of when the payment refers to, but the payment itself, if the date is the 1st of January or after that, then that must be reported as part of the enhanced reporting requirements. One thing that we are trying to do is build on principles of existing real-time report mechanisms. So an example being the payroll reporting. So currently that is a real-time reporting process, and we're building on, I suppose, the functionalities and the various, I suppose, practicalities around that for familiarity purposes, so that employers have some expectation as to what to sort of see and do and what it feels like. We do see this as fitting into existing processes. Obviously, these payments are being made tax-free by employers, so there is a process that should be in place there to ensure that the tax-free payment is being made appropriately and paid appropriately to the employee. So, you know, things like the submission of the application by the employee is obviously going to be checked by a manager or somebody in the organization. they're going to process that application and then decide that it is a tax-free payment that must be made. And then on the back of that, they're going to make the payment via, say, the likes of a bank transfer. And at that point in time, that's when I suppose the report should be filed with revenue. So it's an honor before. So at the time that you're making the payment or in advance of making that payment, you must report that information then to revenue. So again, the 1st of January, if that's a payment that's being made, and it may be for, say a travel and subsistence that took place before Christmas, but the payment doesn't go into to the employee or director until the 1st of January, then that should be reported as part of this process. I suppose one of the questions we get asked on this is to why are we doing this, and I suppose the top level answer on that is this: the government requirement has come from the Department of Finance. It'll provide high level data to the Department of Finance, and that's particularly useful when it comes to the policy decisions that they have to make in around these types of concessions and tax-free payments that are made to employees. So if you take the small benefit exemption, for example, that was changed last year to €1,000 to up to two €500 vouchers that can be paid over the course of the year. So we'll be able to feed back to the Department of Finance now what the uptake of that policy is and whether or not it's been effective as they'd like to see it. It'll also feed into Revenue's compliance intervention framework. So effectively what that will mean is that we'll have real-time information that allow us to risk assess, I suppose, employers on the basis of these payments in the context of their overall compliance. And it'll mean that we can, I suppose, make better judgments and better calls as to what interventions are needed, and we can then divert our resources appropriately. Just should mean less in terms of interventions for employers who are compliant, and allow us to, I suppose, make sure that we have the appropriate resources to support those employers as opposed to using our resources to go after non-compliance. And again, building in the risks that come with these particular payments allows us to, I suppose, be a bit more I suppose, targeted in that approach. It's also going to provide visibility and assurance to employees in relation to these non-taxable payments. So it will be available to them, the information that is submitted by their employer. They'll be able to see that through their My Account services. As I said, it's leveraging an existing design principles. So the payroll design principles, I suppose, it's important to, I say at this point in time that, like, while you may be recording some of these payments currently in your payroll software, so the most likely one being the travel and subsistence payments, the fact that it's being recorded in your payroll at the moment does not mean that it's being reported to revenue. So the report that comes to revenue for payroll at the moment is a separate reporting requirement, and there's a completely different process for the enhanced reporting requirements. So you'll need to talk, I suppose, to your software provider to ensure that they are building facilities that allow for the transfer of that information on the 1st of January. But, you know, depending on the type of software you're using, if you're not using payroll software, you know, you might be using a financial management system or a HR management system. Again, I'd talk to the provider to see if they're providing seamless seamless communications with revenue through their services. If not, they may be providing other services that allow you to comply with the requirements. But again, it's on a case-by-case basis, and I'd suggest that you talk to them. If they haven't engaged with revenue yet, they can still do that, and I'll talk to that a little bit towards the end. If you are not able to report using third-party software, Revenue are also providing facilities on the Revenue Online services for this. So you'll be able to submit the data, amend it, correct it, all the things that you should be able to do with the information via the Revenue Online services, and then check that data then at the submission level, and we provide some information feedback for that as well. As I said, the third-party software's providers are able to integrate their services directly with the revenue system. So we've been engaging with them since the beginning of the year. We've reached out to a number of organizations and I suppose representative bodies to try and identify where we could these third-party software providers. We have a very strong existing relationship with payroll software development associations. So that was a straightforward enough contact, but trying to identify additional, I suppose, providers that are outside of the payroll scope was something that we relied on then employers and representative bodies to communicate that to their, I suppose, service providers and get them engaged with ourselves. As I said, the functionality for employees is going to be there, so that'll be made available from the 1st of January 2024 as well. And as I think I already said, a high-level report will be available to employers via ROS then as well, so you'll be able to check that on a monthly basis for reconciliation purposes. So I suppose the devil is in the detail in these things, and in terms of detail, we are trying to keep that to a minimum, to make it practical enough that it can be used for the purpose for which we intend, but also not to impose too much of a burden on employers. So the three categories that are going to become reportable on the 1st of January 2024 are travel and subsistence, as I said, the small benefit exemption payments, and the remote work and daily allowance. So I'll start with the travel and subsistence. So the main category here is obviously travel and subs, but it is broken down into 7 subcategories. So the 7 subcategories that we're looking at are travel vouched and travel unvouched, subsistence vouched and unvouched, and then site-based employees, which is including country money, and then an emergency travel and eating on site payments. So again, these are tax-free payments that are made to employees. I suppose it's important here, particularly in understanding, I suppose, the practicalities and the requirements around making the payments for these particular categories. Is there's tax and duty manuals that apply to all of these categories, and they're available on our website. I'll give you the details towards the end, but it's a time for employers now to, I suppose, look at those tax and duty manuals, look at the information on our website, and consider the sort of policies that they have in relation to these payments and whether or not, that they're being compliant. But understanding, I suppose, the nuances behind each of those payments is incumbent on the employer to make sure that they're, within the legislation, as they are making a determination that these payments can be made tax-free to employees and the directors. Again, in the context of keeping the information minimal, all we're looking for, other than the category and the subcategory under the travel and subsistence category, is the date of the payment and the amount that's paid under the subcategories. So, for example, if an employee submits a claim for an overnight stay and for I say travel by civil service mileage, well, then that would be a travel unvouched and potentially a travel subsistence unvouched claim that would be submitted by the employee. So these are paid at, say, the standard civil service rates or less, and that would be then reported for revenue when the payment is made available to the employee. For the small benefits exemption, again, keeping this to a minimum, there's the amount paid and the date of payment. Now, for the small benefits exemption, there's a maximum of 2 benefits that can be paid in any year, and the total value of that can't exceed €1,000. So we wouldn't expect to see that reported more than 2 times in any given year. The remote working daily allowance, then, again, the only addition here is the number of days that's being reported. So the remote working daily allowance is a payment that can be made tax-free to employees working from home, and this is a daily rate of €3.20. Again, you might pay this on a weekly basis or on a monthly basis, but you need to report the number of days that you're making the payment for and the amount that that payment is and the date that that payment is on. So again, we're not looking for any additional data. So particularly in the travel subs, we're not looking for mileage, we're not looking for car details, we're not looking for locations. It's simply the amount paid and the date of payment under each subcategory. Another practical element of this in relation to expenses is it is only expenses that are incurred by the employee that need to be reported. So in other words, the employee has to have, I suppose, an outlay here and be claiming a refund or that from the employer in relation to qualifying travel and subsistence payments particularly. So in other words, if they use a company credit card, so this is a credit card that's owned and managed by the company directly, and that card then is paid back directly by the company, the employee will not have incurred an expense in that circumstance. So if they're using that company credit card to pay for travel or pay for an overnight or pay for meals, well, then that wouldn't be within scope for reporting requirements here. So again, it's important to look at that. And like, I suppose another aspect of that, or another example of that, might be fuel cards or toll tags that are managed and paid for directly by the company and the third party provider. So if the employer is effectively paying the provider directly and there's no outlay for the employee, they haven't incurred the expense themselves, well, then that won't come into scope in terms of reporting requirements. It's also important to note that it's employees and directors, and that's set out in legislation. So again, as an employer, like, it's incumbent on you to ensure that you're making these payments appropriately to an employee and that they're, I suppose, qualifying in terms of being tax-free. I mentioned country money on this slide previously, and again, that's a terminology thing that a lot of organisations, so it comes under the site-based employees tax and duty manual, but that's something that you can, again, refer to in the details that we provided later on. But these are all, nothing has changed, I suppose it's important to say, insofar as the legislation around the requirements or the qualifying criteria to make these payments. That has all stayed exactly as it always has been. But as I said, it's incumbent on the employers to look at their policies about how they make these payments and who records them and who's going to report them then come January 2024. But the only addition now is that when you're making the payment, having determined that it is a qualifying payment and it's been paid on or after the 1st of January 2024, it must be reported to revenue. So that's really all this legislation introduced, was that report requirement. Nothing has changed around the actual qualifying criteria or any of the other legislation, so it's binding those various tax-free payments. As I said earlier, there's no requirement for reporting things like kilometers traveled under the travel category, so we're again trying to keep that to a minimum. It is important though to note that if you're making a payment and it exceeds the threshold that is applicable to that particular payment, then that payment becomes a taxable payment and will be subject to the normal tax rules. So in other words, if you're making a payment under the small benefit exemption and you've paid the employee or provided 2 vouchers for €500, if you provide a third voucher for any amount after that, that is actually a taxable payment and would have to be then reported under payroll. So it wouldn't be reported under enhanced report requirements. It would be separate to that because it's a taxable payment. What I'm showing you on the screen just kind of touches on the area I referred to earlier in relation to the third-party software provider. So those providers we're trying to identify were, I suppose, outside of the standard payroll, which I explained we have a good relationship with them as it stands since 2018, 17 and 19. But this message was sent out to a couple of representative bodies, just encouraging them to contact their members and asking their members, I suppose, to reach out to their providers and sort of ask them whether or not they were going to be providing the service. So this kind of kicked off in around March this year. And we have had good engagement. So there are meetings every fortnight with this group. So this is a service user group, it's known as, and these are software provider, third-party software providers, internal ones and external ones, insofar as like in-house or sort of external to the organization. And they come to these meetings then to discuss the interfaces that are being provided for them so that they can create their services and make them, I suppose, feed into the system seamlessly. It's still ongoing. So if you do talk to your service provider and they aren't yet engaged and wish to be engaged with us, they can do that and they can send the details that we're looking for there on the screen, the name, contact email, position in the company, the VAT number of the business, and they can email that to pims@revenue.ie. Now, that's simply there for that purpose. And like we won't be taking queries through that email address, but if a software provider or an in-house software wants to have some engagement with us, and that's the facility. But we do have all of the information on our PITS sort of environments, and the GitHub again can be found on our website, and I'll guide you to that now in a few moments. So I suppose what's happening now is that engagement, that ongoing, and like the systems insofar as development are developed. Any of the payroll software developers that we're engaged with have told us that their systems are ready. They're testing against their services and they're running that consistently. The engagement with them has been very positive. Obviously, we're engaging with like the likes of yourselves, employers, and tax agents that are out there as well. And there are online webinars that have been going on for the last 6 weeks, and they're going to be extended. So if you go to our website, there'll be new ones added to them in the next week or two. And again, obviously, various representative bodies have been part of that engagement process just to ensure that we're getting as much reach as possible. So what I'll do now is I'll just talk to some of the screens. So this is to give you an example of what it's going to look like. I suppose these are draft screens. They're subject to some small changes, but the actual flow should be the same come the 1st of January. They will be made available earlier than that. So we do anticipate that this service will be provided from around the first week of December. So as I said, you will be able to report a payment that may be due to be paid on the 1st of January or after that, but you can make that payment in advance of actually making the payment. So as I said, it'll be available about 3 weeks or 4 weeks out from the actual report requirement deadline. But just to give you an option to make those payments ahead of, I suppose, the Christmas rush and things like that. So these additional services are going to be in the online services on Ross, and you can see there the enhanced report and notification, the enhanced report and requirements tabs, and I'll talk to them now individually. So the first one there is an employer report and notification by file upload. So I suppose the first question is, what is an employer reporting notification? So one thing we're mindful of is the fact that not all of the employers are, I suppose, recording these payments in payroll. So they may be recording these in a different software package altogether, or on Excel, or on paper in some cases. And one of the requirements that is needed as part of the report is the PPS number and the employment ID. So the employment ID is currently provided by the employer via payroll. So when an employer makes a payroll report to revenue, that includes the employment ID on it. So what we're looking at is a service whereby the person who may be reporting for the employer, the enhanced report requirement, may not be the same person who's reporting for payroll. As I said, they are two separate processes and may be handled in different ways by different organizations. So in order for that person to access the employment ID, we're providing this employer reporting notification system. So in effect, what they will need to do is upload a file with the PPS numbers and the names of the people for which they need an employment ID, and we will then produce that file back to them with those employment IDs where they're on our records. Now, you only need to do this once, I suppose, where you get the employment ID. You have a record of it. You don't need to continue to do this ERN process. But again, depending on the level of reporting and the number of employees, you may need to update it on a regular basis. But once you have it, it should remain the same, as that's the requirement for the payroll reporting, that the employment ID remains the same throughout the employment. So unless the employee leaves and then returns to the employment, then you may need to check that the employment ID hasn't moved. So it's a simple enough process. As I said, the easiest way to do it is by file upload. I suppose one of the conditions here is that the file format must be in JSON or an XML format. So CSV files or standard Excel files won't be accepted. So it'll have to be converted into an XML or a JSON file. And there is examples of that on our GitHub. Again, I'll talk to that in a couple of minutes. But in effect here, you're going to browse to a section on your computer, choose the file for which the data is held, and then sign and submit that as you would if you're familiar with, say, payroll reporting or any other reporting through ROS, using your digital certificate and your passwords. We'll effectively, as I said, return the relevant information then to you. So depending on the service that you're using, this might embed itself in your third-party software, or you might have to do this manually, or you might have to upload the file that we return into a different system, or just take a record of it for your own records going forward. If you're using the manual sort of form, I'll talk to that in a moment, but this is the sort of the easiest way, so particularly if you've got a large batch of employees to do it for. Once you have all of the relevant information and you're ready to make a submission, you're going to do that either by, again, a file upload option, which is a bulk option where you can upload multiple employees with multiple benefits under multiple categories in one submission, or you can complete an online form that allows you to do it on an employee by employee basis. So first and foremost, I'll talk to the option doing it by file upload. So again, if you go into our online services and look at submit your expense or benefits button on the screen here, it'll allow you then to access the system. So again, similar to the ERN process, you'll be selecting that you're going to upload the expense by file upload, and you'll be given the option then to browse for that file on your computer. Again, the file format, as always, is going to be JSON or XML. So if you have a CSV file, it'll need to be converted to an XML or a JSON file in order to be acceptable as an upload. Again, you'll sign and submit your digital certificate and upload the file then to ourselves. One of the benefits of the XML file really is that it allows us to give some feedback, and I'll talk to that in a couple of minutes. But things like a CSV file are totally impractical for this type of thing, particularly where there's multiple categories and subcategories, because of the nature of a CSV file doesn't sort of provide for any, I suppose, practical feedback that we might be able to give to somebody who's had errors, where the XML and the JSON gives us a bit more sort of scope to be able to give that feedback to employers, so they can see if there's anything that's not going through correctly. So again, we will give you that feedback. You'll get a report back to say that the file was received, and then you can view the details then after that if you wish. So that's, I suppose, the The quickest way to do it, if you're going to be doing it through Ross, is to file upload. As I said, that will be particularly for employers with sort of a large number of claims or a large number of employees that are being made on a regular basis. It's, I suppose, important to point out that depending on your process, and again, this comes back to the policies that are taken into account by employers in making the payments. So, like, some employers do this on an ad hoc basis, some do it on a weekly basis, or some do it in conjunction with payroll. But I suppose it's important to state that regardless of when payroll is reported, these payments, when they're paid, must be reported separate to that process. They can be included in the process, but that'll be a policy decision by the employer. But if you have an ad hoc position where an employee can be making these claims on a daily basis and you're making these payments on a daily basis, then that would necessitate a daily, I suppose, submission of that information to the Revenue Online Services. So again, that's a policy that should be reviewed, I suppose, in context of what's coming in on the 1st of January. So the other option, as I said, is the completely online form. So this is particularly for employers really where they don't have, I suppose, a file upload solution or a third-party software solution, and they can do this then on a case-by-case basis. So simply to come into Ross services there, and in this section, they'll complete the online form and select the tax year 2024. And we'll pre-populate this, as I said, with any previously submitted details for employees. So you can see there that John Smith has had a submission, or the data has been saved at least by the employer so far, and the employment ID has been called, and that's then produced for the employee. So you can edit the information there, or you can select that person for the information that you want to submit for them. If the employee is not there, you just click on that the employee is not there, and then you can add a new employee. What that looks like then is the following screen. So depending on the information that you have, so if you have a PPS number, you're filling in the PPS number, the employment ID where you have it there. If you don't have it, when you put in the PPS number, the employment ID option will drop down from the employment ID box there. So you'll be able to select the appropriate employment ID then for that employee. An employer reference is provided where you don't have a PPS number or the employment ID. So this is again a similar approach to what we use for payroll. If you don't have the information, you use an employer reference that you then keep the same until the employee's PPS number has been identified. And then once you have that on the submission that you make with the PPS number on it, you include that employer reference, and then that will link back then to the previously submitted details once that employer reference remains the same. And then you don't need to include that after that point once the PPS number is available. So again, the details that you need, first name, family name, and then the address and date of birth, particularly are important when the employer reference is being used in place of a PPS number. So once the information is entered, you'll be brought to the screen where you can enter in the category. So in the example that we're showing here is the travel and subsistence with a subcategory of a travel vouched. So that's a claim that's been made where the receipt has been provided to vouch for that claim. And then the date of payment, then whatever date that is in 2024. You can then add another expense or benefit for that employee. So if you want to add a different category or you want to add a different subcategory, then you can add that then and sort of build up a report, I suppose, for that particular employee. And we'll give you, I suppose, a summary of the information that you provided to date. You can add a new one from that point as well if you want, or you can amend what you've already input, or you can delete it and start that again. And once you're happy with the information, you effectively tick the box to say that the information is correct, and then you submit the expenses or benefits payment. You'll be brought in to sign and submit under your digital certificate, and you'll get an acknowledgement screen then to say that that has happened. You can then, another option, I suppose, is if you partially save. So if you start the process and don't get to the submission fully, it will partially save up to the point that you last moved, and that will be available then for next time you log into Ross, and then you can either continue with that partially saved submission or you can discard it and start again. One of the feedbacks that I referred to earlier on, so as you can see in this example, an employer has made a submission for the small benefits exemption, and the amount that they're reporting on this is €2,000. Now that is in excess of the allowed amount, so the maximum that can be made available in any given year to that employee is €1,000. So if you do make a submission with €2,000 on it, it will be accepted by our services. But again, using the system, if you get it by file upload, the XML allows us to flag that line item, and we'll give a warning message to tell you that effectively that looks like that benefit exceeds the maximum that can be paid made to an employee in any given year. Again, it's for your information only. It's up to you then to make a change to that, but it will be accepted by our systems if no changes are made. Another example here would be under the remote working relief. You can see on this submission, the employer has reported €50,000. Now, the maximum, as I said earlier, is €3.20 per day. And if you take the course of the full year, that obviously can't be €50,000. So again, we'll flag that as a warning message to the employer. The employee obviously will have access as well, but the first thing that I say to employers is you need to be looking at your submissions and ensuring that they're valid. So we will provide this feedback so you can view what you have submitted into revenue. So you can use this facility whether or not you use third-party software or whether you're doing it directly through the Revenue Online services. But particularly in the first few months, it'd be worth just checking in with this to make sure that the information that has been submitted is valid and that it matches, I suppose, what you expect it to be, and just do some reconciliation then on a monthly basis to ensure that it is meeting the requirements. You'll have the option here, as you can see, to view these reports by recent runs, which I think is the last 3, or you can break it down by year, month, a run reference, or a submission ID. To, I suppose, look at it here, this is the recently updated run. So in this case, there's only one. So, you can view the details then that are provided for that latest one, which in this example is just the last one. As I said earlier, we will be producing a monthly report. So again, as part of your reconciliation process, you can go into our online services and look at the monthly report screen. You can pick a particular month for whatever period that you want and generate that report. And we give you these high-level details then of the information that was reported for that period. So these are any payments that are made in the period or that particular month. There is no facility to download this report, but you can print this, or you can print it the file, which is or print it the PDF, which people tend to do. But it's just a high-level report to show the information that allows you to do some reconciliation then on a monthly basis. As I said, this is not a return. This is the information that you're submitting on the daily, weekly, or monthly basis. Is the requirement? There's no actual return date insofar as like what you might be familiar with payroll. So the monthly report is effectively just, I suppose, a guide for that particular period. And as I said, the employee will have access to this in My Account. So again, just quickly, they'll go into the My Services there, My Account, and under the PAYE services card, the expense and benefits option is available to them. They'll be able to pick the year for which the payment is that they're looking up. Depending on whether they've got one or two, like if it's a civil partnership or a married couple, they'll be able to see the details under their various accounts in My Account. If they've got more than one employer, they'll be able to see a breakdown then of the various amounts per employer. And again, they'll get high-level information like what you can see on screen there. So a payment date, the category, the subcategory, and the amount paid will be displayed to them. So I suppose that kind of brings me to the end of the information session. As I said earlier, a lot of information available on our website. So revenue.ie/ERR is the hub, and that has been updated actually. So a pre-recorded version of the presentation can be found on the webpage now, and there's some demonstration slides there as well in relation to the ROS upload facilities. Again, there's a link in there to the GitHub, which is particularly important to software providers if they want to engage with that process. And then there's practical information in there about the examples and the type of data that needs to be reported, and some information about the different file formats and things like that. But yeah, I think what I'll do is I'll hand it back to Hilary, and we'll take a Q&A then towards the end of the session. I think Sonya then has a piece to give in advance of that.
Perfect. That's great. Thank you, Martin. That was really useful, and it's great to see what the profile on ROS actually looks like, and I'm sure that it was useful for people, and also it's obviously very important for employees or for organisations with lots of employees. And I see we have a lot of questions coming through, which is good. So we'll do our best to get through them at the end. So just moving over to our next section, which is on an employment law update. And I think it's fair to say that the last year has seen unprecedented level of change in HR and employment law updates, which have brought several updates that bring immediate action points from employers. And again, it's a landscape that's constantly evolving, and being up to date is becoming more challenging. So hopefully this update this morning will be useful to you, and it's covering some interesting topics such as the Sick Leave Act, the Work-Life Balance, Transparency and Predictability of Working Conditions Directive that's about to be implemented, and updates in relation to gender pay gap reporting. So we're going to hear these insights this morning from Sonya Boyce, who is our Head of People Consulting and Organisational Development Team at Mazars. So over to you, Sonya.
Thank you very much, Hilary, and thank you also, Martin, for a very insightful session. I suppose one of the takeaways that I took from your session, Martin, and you can probably nod if you agree with me, but is the fact that it's, you know, from a policy and a procedure perspective, it's certainly a timely opportunity for people to ensure that, you know, your HR policies, your expenses policies, your subsistence policies, etc., are all up to date. And that's something certainly that myself and my team have been working on. Unfortunately, from an employment law perspective, it seems like we're constantly chasing our tail in terms of updates and trying to remain abreast of the most recent changes. And there are a number of significant changes that have come through in recent months, and more so some that are coming down the tracks as well. So what I really hope to do this morning in the short session that we have is just to give you an overview of some of the more pertinent changes that from a HR and a payroll perspective in particular, you must be aware of, and potentially may be in a situation where you have to update policies, update your procedures, and particularly in relation to payroll codes, etc., that you're capturing that data correctly. So just to move to my first slide, what I would hope to cover today is just a quick update on the Work-Life Balance and Miscellaneous Provisions Act. So this act has come into effect since last July, and it has introduced a number of pertinent changes, which I'll bring you through in a moment. I'm also just going to remind you in relation to the Sick Leave Act, which, as you know, would have been introduced last year. It introduced mandatory sick pay. The thresholds for that are changing into 2024. So again, just a quick reminder in relation to that. For those of you on the call, and I've looked at the attendee list there's quite a number of you who I've worked with in relation to gender pay gap reporting. Again, a particular passion area of my own. This is now our second year of mandatory reporting, with a mandatory reporting deadline as at the end of December 2023. So again, I know a lot of you will be working closely with your payroll, with your HR teams in relation to the reporting requirements from that perspective. And finally, I'm going to just talk very briefly and mention to you as well the Equal Pay Transparency Directive. This is very much, you know, a piece of legislation. It's a directive coming from Europe that is a cutting edge piece of legislation. It's been transposed and with an effective date for 3 years' time. Again, I don't think it's gotten very much attention yet from a sort of a media perspective, but it has very significant ramifications in terms of your own practices, particularly around pay, etc. So just to mention to bring you through quickly the changes around the Work-Life Balance and Miscellaneous Provisions Act. So this particular act has introduced two new provisions effective from the start of July this year. So the first of which is around the extension to breastfeeding entitlements. So you will have recalled there was always an entitlement around breastfeeding hours that, you know, used to be up to a 26 weeks entitlement. It's now been extended up to 104 weeks, so 2 full years. And the entitlement is 1 hour of paid break per day, which can be taken either as an hour at the start or at the end of the working day, or split through as agreed in terms of the employer agreement, you know, throughout the day. So maybe 2 half-an-hour sessions, etc. This also applies to part-time employees, so and it is done so on a prorated basis. But I suppose ultimately, from an employer perspective and from a HR and a payroll perspective, it's an hour of a break each day at that individual's regular place of work. So it's quite a substantial, you know, I suppose, entitlement that has to be factored into your working time. The Work-Life Balance and Miscellaneous Provisions Act also has introduced leave for medical care purposes. So this is an unpaid leave that's intended to provide support to specified persons for up to 5 days in any consecutive 12-month period. So it is, again, quite a substantial entitlement. It's basically a 5-day entitlement that any individual is entitled to in relation to the provision of leave for medical care purposes. It applies in relation to children, spouse, civil partner, cohabitant, parent, grandparent, sibling, or indeed a housemate. So again, this has become a much wider interpretation of the the caregiver, etc. And it is separate to the force majeure leave, which has traditionally been given through the Parental Leave Act. So it's an additional 5 days leave again as well. So from a payroll perspective, I think it's important that you just capture this as a payroll code so that you're able to track, I suppose, the entitlement around the leave for medical care purposes. Two other pieces of interest that are coming down the tracks. They're not in quite yet, but they are coming down the tracks, and they're coming down underneath this overarching piece of legislation, again, the Work-Life Balance and Miscellaneous Provisions Act. So the first is the right to request remote working and the right to request flexible working. Again, I'm sure we're all expert on this on the call today, but certainly, and as Martin just mentioned there, even in relation to the revenue implications around the daily allowance rate. But I think certainly from a public interest perspective, as we know in the past, there was no legal right to request remote working, but this act is going to introduce that there will be a legal right to request that remote working, and this will apply to any employee who has 6 months continuous service or more. Once that request is received, it's envisaged that an employer will have up to 4 weeks to make that decision, and that there are, I suppose there is a code of practice that's been developed with the Workplace Relations Commission in terms of how this will roll out in reality. But I think certainly, we had expected to have heard more of an update in relation to the right to request towards the summer of this year. It's slightly delayed, but again, I think in practice, it's something that many of us and many in our organizations, again, are finding it's almost becoming sort of common course as well. The other very interesting piece of entitlement that it now exists under the Work-Life Balance and Miscellaneous Provisions Act is the domestic violence leave. So Ireland is actually going to be, in effect, the first European country to introduce this leave. And it's a fully paid domestic leave entitlement that must be associated with a full domestic leave policy. So under this particular entitlement, employees will have 5 days in entitlement over 12 months. So 5 days fully paid in relation to domestic violence leave, and that does not have to be, it doesn't have to be applied for obviously in advance. It can be an automatic entitlement, and it extends to relevant persons. So employees may use this leave to also help somebody, a relevant person, in obtaining support at a time of their requirement. So again, it's from a payroll and a HR perspective. It's something in terms of updating your policies, ensuring that you have a policy that covers this domestic violence leave entitlement, and ensuring that from a payroll perspective as well, that you're capturing it correctly from a records perspective. Moving now to my slides, just to mention the Sick Leave Act again. So the Sick Leave Act, you will all be familiar with, was introduced from 2022, which basically provided an entitlement to 3 days paid sick leave for 2023. So just to give you a reminder, under the statutory sick pay scheme, that those entitlements are now increasing. So from next year, it's a 5-day entitlement, increasing to 7 days in 2025 and up to 10 days in 2026. So as we know, before last year, prior to last year, Ireland was an outlier in terms of the European sort of culture around providing sick pay protection for individuals in relation to illness. So workers have been now entitled up to these to avail of up to 3 days in relation to last year, but from going forward now into 2024, that entitlement is increasing to 5 days fully paid leave. And this, I suppose this legislation affects us all. And again, from a payroll and HR perspective, timely reminder to get your policy and your payroll details updated there to be able to hit the ground running for January in terms of that 5-day entitlement. The area that I suppose, as I mentioned at the start, has caused a lot of media attention, and I think it's something that many of you have been working on, and I suppose earnestly now in advance of the deadline of the end of December 2023, is the gender pay gap reporting cycle. So you will recall that gender pay gap reporting became a mandatory requirement for all organisations of 250 employees or more from last year. So last year was the first reporting cycle. This year is now the second reporting cycle. And what you're being asked to report on and to publish is essentially, I suppose, a number of different things. So we have have to look at the mean and median gap in terms of hourly pay between male and female employees. We're looking at the mean and median gap in terms of bonus pay between male and female employees. We want to, you must report in terms of the mean and median gap in hourly pay of part-time male and female employees. You also have to report on the percentage of male and females in terms of bonus pay and also in relation to benefit in kind. So we have done a significant amount of work and supported quite a significant number of organisations in terms of preparation of their gender pay gap reporting, both from a calculation perspective and also from the perspective of compiling that report and building the narrative to explain your overall gender pay gap figure. And I suppose from our experience of last year, there are a number of key learnings, I think, that that apply and that I think are pertinent to share this morning. So firstly, what we've learned from our experience of reporting and assisting organizations in terms of their reporting last year. Firstly, there's still quite widespread confusion around the gender pay gap and it not being confused with the concept of equal pay. So the gender pay gap is not around equal pay. Instead, it's the aggregate difference between what women are paid in compared to men, and it has to look at your workforce overall. And it compares the pay of all working men and women, not just those in similar jobs or similar working patterns or with similar competencies or qualifications or experience. I suppose when we're looking at the overall organization, the legislation requires that the organization is broken down into quartiles and that there is quartile reporting as well across the various bands. And it's that sort of data that is particularly important. But what we have found when working with HR and payroll teams in relation to that is that sort of no one team has all of the information that's required, because so much of the information is, I suppose, held between maybe two systems, be it a payroll system and a HR system. It can be quite tricky and quite difficult for organizations to ensure that they're dealing with a consolidated data set. So that's something that I think, if you haven't as yet prepared your gender pay gap report for this year, time is of the essence. Early November now, you do have time. If your reporting date will be taken from your snapshot date, which will be your payroll date of June 2023, so June just gone, and your payroll data in relation to that is taken as per that snapshot date. Okay. I think it's important, I suppose, to mention in terms of key learnings, the gender pay gap itself, we have, doesn't represent discrimination in and of itself or absence of equal pay for equal work. It basically is a gender representation gap. And at certain sections within, career progression and transgression, we see that there are representation gaps at different levels. It presents as a challenge for both business and policymakers. And I suppose, unfortunately, year on year, Ireland Inc. and indeed many organisations individually are finding that sometimes gender pay gap figures are disimproving year on year. So it is becoming something that is actually, very much a senior leadership priority in terms of addressing and ameliorating the gaps that do present. I think the main sort of going forward, the main directive that's going to assist with ameliorating and helping some of the improvements come through is this piece of legislation around the European Pay Transparency Directive. This directive is, as I said at the start, really is cutting edge, okay? And many of you probably haven't heard of it as yet, but it is going to have direct effect on pay transparency, and I suppose particularly, it's tasked with eliminating pay secrecy, but it's going to ensure that there are, I suppose, much more open conversations around pay, around bonus pay, etc. And I suppose some of the key pieces within this directive, which basically has been transposed into Irish legislation as of June this year, but it has a 3-year transposition deadline, so it will be fully in effect by the 7th of June 2026. Okay, so really from now, I think the key message is you have a limited time frame in terms of the 3 years to prepare for its implementation. It's, as I mentioned at the start, it's coming from Europe, so it's a European directive that is set to tackle concerns around the enforcement of the principle of equal pay, and particularly around eliminating pay secrecy. And it is going to ensure that there's increased scrutiny put on employers to prove that they are addressing pay inequalities and fostering equal opportunities. Whether or not it's going to be accompanied by fines in relation to gender pay gap reporting has yet to be seen, but there is quite a bit of conversation around that at the moment. And I think that would finally sort of be the teeth piece, if you like, behind the GPG legislation that, you know, maybe heretofore hasn't been as, you know, top priority across the board. So what it does, I think, just from a directive perspective, is it introduces a number of different changes. Okay. The first of those, which is around the categories of workers. So under the directive, employers are going to have to be required to report on gender pay gaps of employees carrying out the same work or work of equal value. So that's something that's a little bit different at the moment, because it's going to ensure that actually roles that are like by like and that are very similar are actually reported on gap to gap. It shifts the burden of proof from basically the employee to the employer, and it's an employer onus there to ensure that they can demonstrate they haven't violated any of the European legislation there as well. And there are going to be penalties in relation to that, but particularly in relation to job seeking. So, you know, employers will be obliged to now, at the time of job advertisement, they must now disclose the initial pay range and the pay details for an advertised position. So again, this does have an implication, particularly around, you know, employee value proposition, but also things in terms of just general recruitment practices, you know, and from a competitive perspective, it may pose challenging to some organizations that they actually have to now disclose the pay range at the time of advertisement. You also, under the directive, you will no longer be allowed to ask job applicants to disclose their current or their previous salary, and instead it must be focused on the employer providing information in terms of the full value of the package on offer to the individual. Within an organization as well, there is now going to be a right to pay information. So under the directive, employees will have the right to submit a request to their employer and to receive a written response within a reasonable time frame around the pay levels and gender pay differences within the organization. This is particularly important for organizations who are maybe of 250 employees or more, where their gender pay gap has not been reported publicly as yet, that actually there's going to be pay information publicly available and that can be requested by your own individual employees. So again, very much a changing landscape, I suppose, overall, and something that I think people, in terms of pay policy, pay practices, and particularly around remuneration practices, there's an opportunity there for organizations to sort of think down the tracks a little bit and to ensure that you're remaining as compliant as possible. So that brings me to the end of my session, and I know we have time now for questions and answers. So I'll just stop sharing my own screen there and
perfect. Thanks, Emil. Thanks, Emil, Sonia. That was great, and thanks to both of our speakers on some really useful updates and insightful updates on both topics. I think everyone will probably agree that there's lots of food for thought and takeaways in terms of compliance from an employer perspective. And I suppose, as Sonia mentioned, it is timely to review your various policies in relation to the employment law updates, and also to start thinking through how you're going to comply with enhanced reporting requirements. So just to go through the questions, and we'll do our best to get through as many as we can. There are quite a few. The first one, Martin, is for you. If a company reimburses an employee for office supplies, do they need to report these type of expenses?
I suppose the answer there is no. I suppose it's important to look at the categories and the subcategories in terms of the travel and subsistence, and ensure that the payment being made is within one of those categories for it to be reportable. So there'll be nothing for office supplies there under any of those categories. And again, just familiarising yourself with the various requirements is important there.
Yeah, and I suppose that ties into another question: is where do you get the definitions of each of the categories?
Yeah, so again, I think I refer to the tax and duty manuals or the TDMs that are available on our website. So if you go into into the hub that we have there, there are links to those tax and duty manuals on that hub. So it's a kind of just a handy way to get in and review them. But there are different TDMs even for different aspects of the travel and subsistence side. So again, just have a look through them and ensure that you're meeting the criteria that they set out.
Okay, and then there seems to be a few questions then around access and how all that will come about, and will it be that employers will automatically have access to the new online facility on ROS, or will that have to be set up separately?
Yeah, so again, it's similar to existing kind of, I suppose, digital certificates that are provided that give permissions, I suppose, to organizations. So there will be a default position there for employers and for financial agents. So the actual ROS digital certificate will be available to them now. You can go in actually and check that out. So the actual, say, getting that ready is there in advance. The screens themselves for the submission and stuff like that won't be coming online until December. But yeah, it's I suppose a similar process to what you'd have if you're a payroll agent and you want to start reporting for the enhanced reporting requirements. You will need to go in and apply for that permission, and your employer will have to go through that process with you.
And how long does that process take?
It's very quick. Like it's normally within a day or two, depending on the traffic at the time. But again, you know, in terms of your policies, you may need to look at it because you may have a payroll department that have obviously existing responsibilities for reporting payroll. This is a completely independent submission and independent permissions. So you will need to assign those permissions. You know, it may well be the payroll department that handle all of this information on top of the existing information. But if it's going to a different department, so if it's going to say a sort of a HR type area, the person who's going to be responsible for reporting that payment will have to have those permissions then to be able to do that.
Okay. So I suppose this next question kind of comes up in different forms, and it's something that a lot of people are getting kind of stuck on. And it's if you give an employee an advance payment before they travel, or an advance payment in general, how does this manage, or what's the penalties, or what's the new requirement?
Yeah, so I might again in terms of like looking at your policies, so there's no provision actually in the legislation for advance payments. Any payments that are made, you know, that are lump sum type payments in advance of something are taxable at the time of payment. You know, in order to be, I suppose, a tax-free payment, one of the requirements there is that the employee has to incur that payment. So if they haven't incurred it, then it's not actually covered within the legislation at the moment. So I think, again, that's a policy thing that employers will have to have a look at.
And is a workaround on that then that you'd have to do an extra return? If you were going to make that payment, you'd have to do an additional return on the same day.
I'm not sure. Like, if you take like an example that we've seen, so an employer giving say €1,000 payment at the beginning of a month to cover potential travel that's going to happen over the course of the following month, well, that payment should be taxed. You know, so that would go through payroll in effect as a €1,000 payment. The employee then say makes a claim at the end of the period. You know, if you look at the practicalities of this, like the reporting should be on the date or before the payment is made. So, you know, I suppose the question is, if the submission for the employee comes in after the payment is made, then you're out of sync with the requirements because it hasn't been reported at the time of the payment. So again, I think it's a practicality kind of question that has to be looked at in the terms of the policies that the employer has in regards to those payments.
Okay. Okay, well, I'll give you a break for a second, Martin, and one here for Sonya on gender pay gap reporting. If you have a company that has some UK employees, do you include them, or is it just the Irish-based ones?
So if they're UK contracted employees, they would fall under the UK gender pay gap reporting requirements. So it would just be your Irish-based and Irish contracted and you know, Irish tax resident employees that you report on for that one. Yeah.
Okay. And then given that we're you know, heading for Christmas, we're into November, is it too late to start reporting for gender pay gap this year, for this year?
So in short answer, no. And I suppose as it is a legal requirement, I would urge any organisations who have yet to do it to get your skates on and to start, to start in earnest, looking at your calculation and particularly building out that report and building out that narrative and communications piece. I do believe that there's going to be far more scrutiny now that we're into our second year of reporting where we will now be in a position to be able to compare and contrast organizations, I suppose, against, your competitors, against similar type organizations, and that all those figures are now publicly available in terms of 2 annual cycle years, that I think it's very much timely now for people to start their preparations in earnest. Yeah.
Okay, and we're literally just out of time. So unfortunately, we haven't had a chance to go through all of the questions. So we'll circulate updates after the event, and we'll also share an information note which summarises the steps that need to be taken in terms of complying with enhanced reporting requirements. We'd be happy to assist further in that regard. So I'd like to thank everybody for their attention and their participation today, and hope everyone has a nice day.